Hi everyone, this is Mike Pumphrey from Empathic Finance, and I'm here today to talk about interest on student loans. Don't turn it off just yet, this is good, I promise. As you probably know, some of the provisions of the CARES Act that passed in March for the pandemic relief have expired. That $600 extra that people on unemployment were getting, that's gone. However, some of the provisions of the CARES Act are still in effect. For example, from March to September of this year, there is a payment and interest holiday for student loans. Interest will not accrue, and you're not going to be penalized for not paying, so you basically have this holiday from payment. And that's awesome, especially if you're unemployed right now. If you don't have any income, do not worry about your student loans. They're not going anywhere, they're certainly not going anywhere, and you have bigger issues to worry about, like getting income. But if you have income, if you're employed right now, then you have a big opportunity here, and you don't want to waste it. Interest on student loans, or on any debt in general, creates kind of a drag effect. When you pay, your monthly payment, half of that, or some of that, or even most of all of that, depending on how much debt you have, goes to interest. So you're not actually paying much of your loan down. So during this payment and interest holiday, any payment you make, all of it is going to pay down your principal. And that means you're going to pay down your debt much faster if you pay during this time frame. So let's take the example of Rand, who has $35,000 in student loans and is going to pay it off over a 10-year period. Now this loan is at 5% interest. If Rand in a normal economy would be paying every month, it would take 10 years, and he would pay about $370 a month, and when all is said and done, he would pay about almost $45,000 total. If, during this time, he does nothing, if he takes advantage of that payment holiday, then all that's going to happen is that he's going to pay off his loans 6 months beyond when he originally expected to. So 10.5 years instead of 10. Now, what if he were to continue paying during this time frame? If that were the case, he would pay off his student loans 5 months sooner and would end up paying $1,500 less in total over the period in which he was paying. That is 5 fewer months of payment and $1,500 less spent. But here's the best thing about this. During this payment holiday, this 6-month period in which you're not being charged any interest at all, you can make payments at any time, and it doesn't matter when you do it. You could make 6 months worth of payments in March, 6 months worth of payments tomorrow. It doesn't matter. As long as it's all within that period, the result is the same. Let's say you've got $5,000 and you're in Rand's situation here, and you pay off $5,000 today or tomorrow or at any point before the end of September. What that means is that will save 18 months off your student loan payments. That means that you're going to pay $3,000 less. So by paying sooner, you end up paying less. So if you're watching this video in the future and the 6-month payment holiday thing has ended, this is still relevant to you, because the most important thing to take away is that the sooner you can pay down your principal on your loans, whether they're student loans or credit card loans or anything, the sooner you pay it down, the less you're going to spend. So it matters much more what you do at the beginning of the loan than you do at the end. So you've got a big opportunity here. But remember, only if you're earning income right now. If you're not earning income, don't worry about this. Your student loans are not the most important thing right now. But if you are employed right now, and you do have income, and you do have a little bit of extra money to throw at your student loans, this is a great opportunity to make some big progress. Paying off student loans is hard. It takes a long time, and it's really easy to get discouraged. But you can do it. Remember that phrase, how do you eat an elephant? And of course, the answer is, why are you eating an elephant? Talk to you next time.